Good morning. It's Monday, August 4th. Welcome back. New week, new month, new opportunities. Zach Howard here for your morning market update. What are we looking at? Markets pull back from all-time highs last week as volatility spikes higher. That's what I keep harping on. Volatility is a function of price movements. The narrative can be seen through a poor jobs report on Friday in the US, where then the president fires the person who reports the job numbers. Banana Republic type characteristics of that administration. But looking inside the macro outlook, bond yields pull back with the outlook of a central bank invisible hand cut in September, which they didn't do last week. Volatility had been trending down from 20, 18, 17, 15, melting right down to almost 14 in July. Boom, this big spike up in U.S. equity volatility. And you see the volatility spike like that, the higher beta trades, particularly those altcoins and the smaller cap stocks pull back in kind, vice versa. The large caps continue to get the love and get the flows in U.S. equity markets at the mercy of the small caps. That is the nature of the beast, the machine, the passive machine that is flows. But last week's highlights from what the global financial system is a concentration in these mega tech companies. Particularly last week, Microsoft, Apple, Meta, Amazon, Google, those five companies alone, 26% of the S&P 500's $52 trillion fiat market cap in just five companies. The concentration of fiat wealth in those companies, because they are where the puck is going with the world, with technology, with innovation. They are getting the flows. They are spending the money on CapEx around infrastructure through AI, through technology. $13.5 trillion in fiat market cap in those five companies. And how did they do? They did exceptional. They are worthy of these continued higher prices in their stock. $483 billion combined revenue through five companies, almost $100 billion in actual earnings, despite considerable massive CapEx spending to build out their future growth plans, which takes away from earnings. They're still putting up monster numbers. A year ago, those five companies, $185 billion in revenue. Big time advantage. Sorry, $100 billion in revenue a year ago, $40 billion in earnings. So massive rate of change increase. This is before they even take more market share from smaller companies. You can see the revenue breakdown. Amazon obviously leading the pack as a marketplace e-commerce business as well, outside their AWS and their infrastructure spend and pivot to cloud-based growth models there. For years, Jeff Bezos always went to the accounting department every year when they're doing their earnings and say, "Oh, we're going to show a profit. Let's spend some money on R&D. Let's have a new pet project. We don't want to finance the next war. Write a corporate tax bill. Let's keep spending." That's been the model, and that's what these other companies continue to do. Despite massive increases in revenue and profits, they continue to spending for the future, and they are so big, it's going to be hard for the smaller companies to be able to exist. They'll just buy them up, but they have something that's significant to the market. That's what they're going to look at. Microsoft into all-time highs last week alongside Meta, pushing the envelope there. They had a big gap up after they reported earnings. I think it was on Wednesday. Deservingly fall. Look at the revenue year-over-year increase, massive, 18%. Operating income up massively, 23%. You see over here the yellow bars. They're getting the love and they're getting the flows and continue to be. Google, aka Alphabet, also stream of different organizational revenue, just the cloud, YouTube, etc. Look at the revenue growth curve of Google. Meta, Zuckerberg, he continues to come out and invest in data centers. I talked about a couple of weeks ago. They are building one the size of Manhattan alone. They talk about their super intelligence AI that's going to be learning on itself going forward, and what he sees there in the earnings call. Check out that color from Zuckerberg after its earnings. I was a big skeptic of Meta years ago. I've been proven wrong, and they continue to deliver. Amazon, similar story, continues to bump up year-over-year increases, not just North America, but international as it grows. Talked about the AWS platform outside of just a traditional e-commerce business. And Apple, really the only disappointing company, those big five, that has had challenges growing in the AI technology space. They try to do acquiring other companies like Meta's doing, picking off employees of some of these other companies, and they're falling behind. They haven't really innovated, and they're more of a consumer discretionary company at this stage as they pose to these other four companies in the AI technology race. So Apple is a lagger. Its share price has not done what the other four have this year, and it's still in a bearish trend. So Apple needs to catch up to the pack. But this is where the puck continues to want to go. We are going to continue to have innovation, CapEx build out, and thus higher profit margins through the lens of these companies for what they are building for the new world. The old school companies, Whirlpool, Ford, GE, they are not as relevant. So yeah, you got about 492 other companies in the S&P 500, but the real action is in these 5 to 7 names, these mega cap 7, and they're going to continue to disrupt the world as we go forward. But even looking outside just what those 5, 7 big companies are, forget all those little smaller companies, the private sector in the technology space is massive. The S&P 500, yeah, they get the love. They're currently at 22.6 and a traditional financial metric. But if you are trying to price in the technology and the AI and all what's coming in terms of operational efficiencies for the companies that develop these companies, you're not going to see it. You're not going to see it in the Russell small cap. You're not going to see it in those companies. Look at OpenAI, its current private sector private raise financing round, 300 billion value that company at Atlantic, 170 billion is most recent private financing round, and XAI Elon Musk pet project as well. So those three companies they're not they're not actual public companies alone, 500 billion valuation near. So that's what's happening. Lots more to cover this week in markets, and back again tomorrow. Have a great day.